What's going on, YouTube? It's been a while, I know. Been busy. It takes quite a bit of time to make these videos. I also don't really want to keep pumping out videos for the sake of pumping out videos. I'd like to do my best to keep each one pretty high quality and fresh, versus just releasing the same old content that everyone else has probably already done. Maybe you guys can let me know in the comments what you'd want to see more of, and I'll see what I can do to accommodate that. But for today, I'll be breaking down my biggest trade of the year. Wasn't an easy one, but it was one that I had really high conviction on, and that came with some pretty heavy sizing. A lot of factors came into play here, and I'll be breaking each of them down. As always, let's start on the high time frame. This is a 1-hour chart with daily profiles, as you all know by now. Key thing to note is the gap down, Sunday open Globex. What's interesting is that they open right at the swing low, barely going underneath it. And we can see right away they could not really find any interest in going further. As the 5-day profile showed a taper, it remains. Upon the open, not enough interest. You see 2 wicks on these 1-hour bars, downside wicks. And ultimately, the market starts to go back upside and build and build and build all the way to the open, where it starts to rally. So to start off, the first thing I did was to look for what we've regained, where we came from, and where we might be headed towards. So as you can see, as the market failed to extend, failed to build enough volume, they started to build upside all the way back to where the breakdown occurred. Right here, this is the majority of volume. So the next thing I would do is I would mark this volume out. At this point, we can go ahead and delete this line here and look at this zone, this drawing. Upon doing so, now we can really notice this is the majority build before the gap down. This is the majority of inventory. Now the market has gone through and above it and is building above it. Not only is it building above it, it has already tested back into it. We've got a wick on the 1 hour right here. It closes as a continuation candle. At this point, to me, anything under the 300s should hold for a bid for a move all the way through to the upside, through Friday's high and possibly higher. Let's drop down to the intraday chart. We're going to replay this at 3x speed. So we're going to watch the tape. We're going to see exactly where the buying starts to step in and to actually initiate against the sell side. So it's important to note on the way down where the selling really takes place and the continuation that they get from it. So this is the moment where they start to really press. You can see the building delta already. They're mashing the gas on the sell side. You look at the prints, you can see the bid is pretty much gone right now, and they're building on the sell side. They're getting continuation. The volume is pouring in. You can see the delta is increasing. Pretty strong here. The volume is building. 142 lots, continuation. 81 lots, continuation. We're moving lower. Right here, this is a key moment. 110 against the bid, and then 114 right against the ask right after. There's no taper yet, so there's room for this to go and probe lower, but this is a very important piece of information. Because as the market has moved lower on strong delta, on strong selling, there was no counterparty getting in front of it. 142, 28, 26, 81, 25, 15, 14. Right here, in about a second, maybe less, absorb 110 on the bid and immediately cross the tape and hit the ask, 114. This is not just a passive buyer, this is an active buyer here. Do we know that they're going to hold the market? No, we don't. But what we can do is wait and see what the market does beneath these prices, these 88s and these 89s. Does the selling continue to pour in? Does it still build volume? Or does it taper? Does it fizzle out? And now price will start to trade against them. Because we do have to keep in mind, this zone here, this is where we would expect it to hold. It's been holding all day. They've been trying to sell this spot all day beneath this volume, beneath the POC. And every time they do, they pour in massive amounts of delta, negative delta, just to find a lack of continuation. And as they continue to probe lower, they're still building huge negative delta. That means there is a passive bid that's in the market that's still willing to absorb and buy these prices. If the selling continues to pour in and they don't get the continuation that they're looking for, this whole thing can squeeze to the upside and to the higher targets. One of the key reasons I was bullish on the day was because we were looking at about a 200-point range at the time. The average range over the past 10 sessions has been about 300. As the market holds and builds higher, I am expecting not just an extension of range, but for that extension to be to the upside rather than the downside. We gap down all the way to the swing low on a high time frame, and we've regained the entire range to the upside and are firmly building above the volume that sent us lower. The logical targets at this point would be the prior day high and the 50% IB extension. Why the 50%? If we are trading above the IB or below the IB and we're accepting the prices outside of it, what I like to do is to target the 50% extension. The confluence here is that because the IB is so narrow and the day's range, an extension all the way to 50% would still mean that we are within the average range of 300 points. To me, that's very reasonable. It's very achievable. So we've got a lot going for this long thesis. We've got a strong market reclaiming an entire gap down. We've got building negative delta, which indicates a passive bid, which indicates a supportive market. For as long as the selling does not get continuation, it gives the buy side a chance to see a squeeze to extend the day's range up towards the average range and into the higher targets. To me, this is a prime opportunity worth paying for. Let's continue the replay and watch the tape here. So they're trading under now. You can see the volume is not as strong. They are still finding that bid. You see 40, 30, 29. These aren't big bids, but the selling isn't exactly big either, right? They have to get interest, continued interest under these 88s and these 89s. So as they start to move back up, you do see pretty decent buying. They're still lifting the offer, right? So at this point, you really want to rush in to get your fills in this range and be ready to take the risk off if they poke even lower, because a buyer has shown themselves. And if you want to take the market to the long side, this is where you want to be. So let's continue the replay. Start to get the orders in. And we just watch and we see. So still, we're seeing reloading. They're reloading higher, right? They're showing acceptance. So now, as it goes higher, you really want to get more of the size on if you're looking to add. Right now in the 92s, 93s. Let's reset the tape. So there's a key difference here right now. As the market started to reload a bit higher, every time it pulls back, you're going to see weaker prints, right? Single digits. 24, 25, 27, 21, 23. It probes lower and nothing. So this is very key. Pokes a little lower. At this point, I'm thinking, all right, I might have to get out of this while I can and look to buy the 270s. I was willing to buy this entire range. What I needed to do was just wait for the market and the order flow to come in and show me where they're looking to really be supportive, to buy the range. If we were to lose this node here, go through the low volume, this would be the next spot. This would be the last spot that I would look to buy. These are the 270s right here. Because right underneath is low volume. And if they're finding interest in low volume, this thing's not going to hold. So at this moment, I was willing to buy all the way down to the 270s. So I was prepared. If the market were to fail to gain traction here, hold, and continue above, I would be flattening this trade and looking to reposition if they look like they're holding the 270s. Obviously, in hindsight, we know that doesn't occur. But looking at the tape now, you don't see that there's much more selling interest than buying. The prints aren't massive. The interest isn't really there for continuation. And if you look over here, there's a lot of negative delta. And if they were to be traded against, this would be a squeeze. Look over here. You've got 239, 162, 371, 105. So let's keep the replay going. You can see the bid is still refreshing and it just squeezes, right? So at this point, it's just like earlier in the day, there was a point where they squeezed higher and they went all the way back down. The thing is, this squeeze left a lot of imbalances, likely to be traded into again. And the thesis remains the same. They are not willing or not able to press further downside with the selling. Again, we are looking for an extension of the day's range. To take profits prior would be foolish if that were the idea. Even a new high of day does not mean that the market is getting the extension that we're looking for. Usually you would scale out, take some profits at a new high of day. But for this idea, the new high of day does not fulfill the trade idea. The idea is that we get closer to the average range, which is about 300 points. We're seeing 200 points at this time. The key benefit to using the DOM is to be able to get your contracts at the best possible price. If I'm looking to size really heavily into a trade, it's because I have high conviction in the thesis. If that were the case, I would be willing to get more tickets for the opportunity. Hence the 18 right here. And if I think the opportunity is this good to get 18, and I've got reason to believe that these are very good prices, this is very good access, these are very good seats for the show, I'm not giving them up just because the market is moving in my favor. I'm looking to fully capitalize on this idea, which means even a new high of day does not mean that I should peel off any contracts, because that doesn't fulfill the thesis at all. The thesis is range extension, not just any extension, but extension towards the prior day high and the 50% extension, because all the way up here, it still is within the 300 points range. So, as everyone knows in hindsight, they make their move. I'm going to speed this up now to, we'll say 7x, just to get it moving, because everyone knows what's going to happen. The market does make a new high. It trades the prior day high. It trades into the 50% extension. So I just want to note some things on the way. We do have volume building higher now. So on this move down, we got volume build sequencing lower and lower and lower and lower until they found that buying, and the delta just unwound. But what's important is whether they hold this. You can see that the volume is building here now, and it's not just any volume. Look at all of this positive delta. This is very important to note. They're getting continuation now. You're going to start to move. You can see the delta is building. 744, it closed. So this is a very key spot for the NQ to have to hold. This is where they're building acceptance now. They're building volume, and there's a lot of positive delta. There's a lot of aggressive buying here. Price should not be able to slip below this. So as we see the volume build, we look at the deltas. It's going negative. where are we still building? We're still building in this range where buyers have shown themselves they can't sell under these prices anymore. So the delta starts to unwind a bit. Now it's 77. They're still trying to sell through this. They blip right under, and what? It's not enough. So in the range where buyers really showed their hand, they're still buying. You can see the deltas still stacking up in these 16s down to the 12s. At some point, you just got to get out of the way, right? The leg-to-leg delta has reset and it's full of positive delta at this point. It's approaching 300 delta. They're getting the move. It's running up. They're building higher. Get this crazy move. Now you need the market to hold. You need it to build higher and hold higher. And that's what they're doing. They close this at 260 positive delta and they're building towards 300 on the next. This is a freight train. At this point, I'm looking at this and I'm thinking there's no reason for me to take profits on any of these contracts right now. The move that I anticipated, the thesis that I had, is currently playing out, and it's doing so with very aggressive buying. I mean, you could say there's probably short covering in here too. Because like we mentioned, they tried to sell really heavy underneath this volume. When they finally ran into a wall, everything unwound. So, speed this up. Long story short, look at the deltas. They're building. It's a lot of delta. You get prior day high, and eventually they move up to the 50% extension. So, to add even more Confluence to this, for this video, we're also going to take a look at ES, which is something that I do watch. I have a 5-minute ES chart always up and an 8-tick Renko footprint. So looking over at ES, you can see this is the majority of the volume. This is the range. This is the low side of the range. We look to the left. You can see that there are wicks right here. POC is here, and this is where it starts to taper. So this is really good to use as a key reference. They should be holding this. The market ran up, tested downside, continued to go up, held the downside, and started just building this range. 1, 2 wicks to the downside, and the majority of the trade is above this. You can see the volume build. This is the lower edge of this node. If they were to get continuation downside, they're going to need follow through. And so we saw what happened with NQ. We're about to see with ES. We're going to look at the deltas. We're going to look at the order flow. We're going to do it at 3x. So let's start it now. You start to see delta is already pretty negative. They had a lot unwound here. They had 674 positive, went down to negative 108 into negative almost 800, and they're building it now. They're at 800. They're going to 900, 1,000. They're really trying to press this right here. This is the same zone marked on the footprint. Right now they're breaching 1,000. No taper just yet. It's really heavy. 441 here. Still building negative delta. The selling has not stepped off. We're at almost 3,000. So, very important to note here. We've got minus 1,390 delta at this price, 53. They closed this at almost negative 3,000 delta. When you see activity like this, it needs to get continuation. There is a lot of selling located within this range. And it's not just this range. This one at almost 800. So they're really pressing down here. The delta is still building. Look at the order flow. They're still trying to press this lower, but they're not really building that delta. There's a counterparty, right? So now they're starting to build, but the range is really narrow. They're having trouble getting continuation. And you can see on NQ's price ladder, this is where they found the buyer. This is what it looked like on ES. This is where ES was trading. It was finally poking outside of this range to the lower end of this node, pressing with very heavy selling. And as the selling continues, we do see really heavy delta, but this range is really narrow. They are having trouble pressing this lower. The pace is definitely increasing here, but the range won't extend lower. 700 delta. Still building that volume, but they can't push it. So you can see on NQ's ladder, they're starting to reload that bid. They're starting to jump higher. And on ES, you do see buy interest where there was a big seller. At this point, you don't know if they're going to get continuation here. What we do know, though, is they are trading above this batch of selling. This is very aggressive selling right here. You can see the deltas. You can see the volume. We know that this was around negative 800 delta. Considerable amount has been unwound, and now they're holding above this. If they start to hold above these 53s, this could be really dangerous for the sell side. We're watching the tapes, getting closer to 800 again on the delta. But they're still having trouble pressing this thing lower. Getting close to 900 now. Still, the range can't extend. If they find trade above this, it's going to be big trouble. So again, very important to note, this is where heavy selling is taking place, right outside of this range. They need to get continuation. Not just because they're attempting to trade downside of this range where it's been holding, where a passive bid clearly exists in the market, but because they're throwing so much on the sell side that if they get traded against now, this could be the squeeze, just like it was in NQ. Over 900 delta. And there it is. So now the delta is very positive. The shorts are getting squeezed. The market's just continuing. So as it comes back, you can see, again, in this range, what happens then? They were very happy to sell it earlier. Would they still be willing to sell it just the same now? Always consider, if the selling was that strong and they couldn't break it, if the selling does not come back as strong, they for sure won't break it. So it looks like the delta is more positive than negative now, as opposed to prior. Very, very heavy. You can see this is the same spot where NQ found its buyer as well. If that selling could not push this market lower, this selling certainly is not going to do it. You can see on the tape reader, it's starting to curl back towards positive tape. NQ found its buyer. It's holding this range. It's building that interest higher. ES well back within this range towards the upside. Many, many, many confluences for this long idea, for the execution, in the order flow. It's not something that comes very often, something that's this clear, that's this actionable. So I chose to just size really heavy, let the chips fall where they may. At some point, if I'm wrong, just cut it, move on. Didn't work this time, might work the next time. It's one of those things where if you're right, you're going to get paid a lot. If you're wrong, you just cut it. I was willing to buy all the way down to the 270s because I had this much conviction in this trade idea. We had still a narrow range, well below the average daily range. The upside targets would coincide with range extension and the direction. And it's not that often that the market really shows its hand on one side and gets traded against in a really big way, in line with the overall market direction. Usually, these instances are reversal trades, a lot more dicey than simple long continuation for range extension into very logical targets. So we did something a little different in this video. We didn't look at just NQ, but we also looked at ES, something that I always have up. I always have the 5-minute ES, and I'm always referencing the 8-tick Renko footprint. There are a lot of key points that I touched on in this video. It's probably going to take a few watches over to really capture everything. I feel like I've just shown a lot of what I use as inputs, and just it's probably one of those things where, after watching it several times, you'll really see everything for what it is individually and then in Confluence with each other. After doing all these things for so long, the same old thing over and over, it's just a matter of glancing over at the inputs for me to get my information, the information that I need, what I'm looking to execute on, patterns that I've recognized to be profitable over the years. Ultimately, like every trade, it was all up to the market. All I could do was map out the locations that I would be willing to buy tickets from and let the market figure out the rest. I know it's been a long time since I've released a video, and I hope this one proves to be helpful for you guys. Feel free to leave a comment below, like a suggestion box of what kind of content you want to see more of, and I'll try my best to accommodate. So for now, please remember to hit the like, do all the engagement stuff. Everything that I put out is free, and I'm sure you can all see the Lucid code that costs you nothing to use if you're feeling supportive. For all who already do use the code, I appreciate it greatly. And I don't know when the next video will come out, but until then, peace out, YouTube.